stripper discount causes Tesla's stock price to fall by $100 this week, is our wrap up of the week analysis. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. And if you enjoy the show, please take time to like and subscribe. We also wanted to encourage you to take a look at Peter Lynch's book, One Up on Wall Street, because it sort of explains much of the logic behind what we're going to do in our talk today. And we want you to broaden your knowledge base because I think it'll make you a better investor in the process. Also wanted to note we do have a few shares of SpaceX in case there's interest. Drop us a note on our Facebook page under Teslafaninsight in a private message. At any rate, we wanted to do, as we were preparing for our weekly wrap up of the week's activities on the markets for Tesla, as you know, the market was kind of down. NASDAQ was particularly hit hard. And to combine with that, Tesla got slammed again. So we've now gone from 850-ish or $800 a share all the way down now into the early 600s. And the question mark is kind of what's going on here, why, and where do we go from here is a logical question. So we actually have a number of folks like yourself who over time we've had a chance to introduce ideas that you've been able to trade efficiently. One of my strategies from all this is we've been doing a discussion with you where we actually sort of introduce you on a backward basis when needed into how sort of the investment process works for large corporations like Tesla. And so one of those ways we've done that is to introduce you to stuff like One Up on Wall Street by Peter Lynch. And as you read that book, you can see why there's a very interesting sort of phenomenon going on. So think about this. The daily production of cars from VW is 500,000 cars a day, right? And VW's market cap is $100 billion. Now, Tesla's production for last year was 500,000 vehicles in 1 year. So the question then is, if the value of the stock was based on the number of vehicles per day produced by a corporation or the number of widgets or whatever the product may be, then all of a sudden Tesla would be worth a very small amount compared to the value of VW or Daimler or some of the other companies. And so that's not the case. And so the question that comes up is, well, you know, what's the deal here? Why? How does it work, et cetera? So what's been happening here is that there's a lot of our viewers who own Teslas. And I always reference you back to Peter Lynch's book because one of the things he talks about is there are a lot of people who are, for example, doctors who are buying tech stocks and tech stock executives who are buying medical stocks. And he always recommends that people try to invest in things that you have a knowledge competitive advantage in. And so that's kind of one of his core logics of his process on how to invest well. So what we wanted to, so the fact that you purchased a Tesla or own one or have friends who own them combined with all this gives you an insight truly into how good the company is, how good the products are, why you chose it, why you spent as much money as you did on it, et cetera, all these data points. So when we go back to our analogy of the difference between a VW or a GM versus a Tesla and how few vehicles, what this means then is that there's a concept called the growth rate of the company. So basically, if your company has a demonstrated growth rate and that growth rate is accelerating at, at or above what it's been doing, then the way the market or the large institutions will value that company is basically take the earnings multiplied by the growth rate, and that equals the price of the stock. So for example, if you're a Ford and you have a very low growth rate, but you have a consistent sales of products, pickup trucks, etc., you ain't going out of business because you're paying a nice dividend, but your stock price is going to be low in the $10 or below range because the growth rate that you're experiencing is slim to none. So everything relies on what you produce today in terms of value. So what we wanted to dive in today from a analyst standpoint on Tesla is there's this interesting problem that Elon has been working with that they came up with in Silicon Valley maybe 10 or 15 years ago. So what the interesting problem is that look at the battle between Apple Corporation and Samsung. Apple came out with the iPhone and it was a blockbuster. Samsung straight up copied it and brought their phone out in every way matching Apple, but Apple had a whole bunch of patents. So what ended up happening was that Apple went through very long court delays, and the net of the whole thing was Samsung loaded a bunch of legal fees on Apple. They were slowed down a little bit in terms of their products to market, but the value of selling all those Samsung phones was so high, and other competitors was so high that they were willing to find ways around the Apple patents to make sure they didn't become irrelevant in that business. So what this tells us about is that there's this transition that happened in the market in Silicon Valley that focuses on the fact that there's a concept called time to market. So you have a battle to figure out, do I A, patent everything I can, and then sue those companies once they come after you in the marketplace with products that they just straight copied you, or B, do they keep secrecy in place as long as possible and then sort of release on the world products? And what the game is that can you deliver enough products over a certain time window to blunt the potential impact of competitors using your technology and patents or patents to come after you? So this has resulted in a sort of a very interesting back and forth between Tesla and its competitors. The only reason I believe right now that Tesla is in business and continues to do extremely well is that the process time to market of new battery technology is 3 or 4 years. And so when you start your factory today to build a gigafactory to produce batteries, the completion of that sucker is between 2 and 4 years away. And so this sort of zones into how and why we think we're seeing what we're seeing right now in terms of the stock price. So basically, the problem we have right now is Elon recognizes that secrecy on a lot of fronts is the only way the company survives, because there are so many large competitors waiting to blow Tesla out of the water with its own technology, patents, et cetera, that they've copied or now implementing. So that is an interesting problem, because this now says that everything Tesla does is under a microscope, because competitors recognize that solutions Tesla develops and implements potentially puts them out of business. So we've gotten into this interesting space. When we went back and talked about, well, wait a second, how can a small company like Tesla carry such a big market cap or market capitalization? That's a great question. So what ends up happening is analysts are seeing that growth rate of the company. They're seeing how big the market is that company is growing into, and that's how you get Tesla's large market cap. So there's been this little battle going on between Tesla and the analysts that are required to sort of define how the company's going to do. What the battle is that Elon has to maintain secrecy in a large way to make sure that competitors don't leverage their advantages to wipe the company out. And so the biggest secret that we can't see, but we sort of get hints of it, and everybody's wondering about this, is what's the backlog? So how many Model Ys are people waiting to buy in Europe, the United States, and China? And how deep is that backlog? And how long is it going to take for Tesla to meet that backlog? There are all these mysteries like that analysts actually need as a way to figure out how to value the company. And so when you don't give them, like Tesla in the United States, they still have a China, uh, how you can get information on Tesla organization that works with the Chinese government and others. But in the United States, the only way you get information on Tesla is by tweets from Elon. He shut down the department, one, because of the cost of carrying those people, but two, because there's a secrecy reveal process that they have, and they have no interest in being efficient with revealing secrets because they know that incremental piece of information is put together where analysts are trying to get a better feel for the company are immediately handed off to competitors and become a problem for the company going forward. So this puts us in an interesting position. The way you value a company is driven by all of these metrics like growth rate, backlog, all these numbers that analysts can't get. On the other hand, um, how do you for sure tell what's happening? So this is why the analyst meetings for Tesla end up being such a big deal. And the next one, in terms of how many cars were shipped and sold just after the April 1st closing, and then the financials that go with it. So there's a whole bunch of information that has to be gleaned from that that will determine what the stock price is of Tesla. So put your seatbelts on, because by this time next week, after April 1st, we're going to find out the number, probably April 3rd or 4th, from Tesla, the numbers from Tesla from around the world. And so what's going on right now is this process where, for a lot of analysts, this is a guess. And so what's happening here is you're all of a sudden in a position where you have analysts whose bread and butter, life or death, depends on having a good command of a company. And Elon's process to protect its secrets requires that they hide information that that analysts and investors need to better have a command of what the value of the company really is, based on sort of all the tools they're going to use to value that company, in this case Tesla. So the next sort of issue that pops up is Elon has a number of bad boy moves that have gone on. And so if you think about it, when Battery Day hit last year, he announced that he's building an entire battery factory adjacent to the current factory in Fremont. Now, this answered a very interesting question, which is, you could look at Elon's balance sheet and see what his profit and revenue was. But all of a sudden, a problem popped up, which is the you could see the numbers inbound, but not all the reasons why money was going out or outbound was made clear. So this is why I call this the Tesla stripper problem. So what you can say then is, now wait a second, there's this company, there's a CEO who's kind of, smart guy, but a little bit crazy. But all of a sudden, we're missing $200, $300, $400 million a quarter, and we don't know where that money is going. And so if we don't know where that money is going, we have to assume, let's just lop that money off and assume the company is doing worse. Because even though that money came in the door, it ain't doing nothing that we can tell makes sense for a company to do. So perhaps Elon built a giant stripper club on the back end of the factory, and he's making it rain and throwing away money all the time in that space. And therefore, we have to discount the value of the stock by the amount of money that went that way. So there are two other incidents of money disappearing. The next one we have to talk about is Bitcoin. So what if a whole bunch of people bought their Teslas using Bitcoin, and now you add to the damage to the balance sheet that Bitcoin might have done? How much money is that going to be? Is it 50 million, 100 million, 200 million? Who knows what that number is? So one of the things you have to do as an analyst is say, hey, if there's a potential negative on the balance sheet relative to earnings, we've got to do a discount against the stock price / earnings potential by what that number is. But right now, that's an unknown. So it's my sense, for example, when you look at one of the big problems here in terms of the numbers for this quarter has been Elon brought in Bitcoin and the company's actually made great money off of it, but it can't be recognized until those Bitcoin are sold. So in essence, you get all the expense, but none of the benefit of this, the good strategic thinking of bringing in Bitcoin. So we're now in an interesting position. The final one that comes to mind that we've already talked about is why was there such a large gap between the revenue numbers being better than expected and the earnings numbers being lower than expected? And so our argument on that was the fact that Elon began production of the Model Y in China prior to uh, what the Chinese were approving so he could get a running start into the quarter. The problem, though, was that because they weren't allowed to recognize that revenue and take the money uh, from one part of the balance sheet to the other, because most of those customers had already paid for their vehicles, you had this problem of, well, wait a second, um, there's this hole in your balance sheet in the form of profit that's missing, and where did it go? And you're not answering the question, so we have to assume a negative on that component of it. So I believe that these sort of unknown dark corners of Tesla's balance sheet are why the stock price is getting smashed right now. So there are tech companies that are extremely transparent, a lot more transparent, and you can understand where they're going when it comes to Google and Microsoft, some of these other places. But there are other companies where, hey, we're not clear. You've been doing well. We're forecasting you're doing extremely well. But the easier it is for us to master what you're up to, um, we don't get surprises. So as a result, Tesla, I mean, for example, we're in a position right now where a week from now, Tesla's stock price could be 1 to 200 points higher, or it could be 1 to 200 points lower, because very minor details of where the cash is, what the profitability is, all these things can influence greatly the prices of where these stocks are and where any stock is. But in the case of Tesla, um, there's almost a take a package of all these things that have been going on, and you have to label it as the Elon discount. So is he deliberately trying to jack up the company? Absolutely not, as we've described. What he's really got to figure out is strategically, when is he going to reveal things or not reveal things, because competitors are leveraging that information to figure out what the response is going to be to the company going forward. So this bottom line says that, hey, if the NASDAQ is down a lot of points as it is, not only will Tesla get its share of down because we're just paying a lower, you know, we're going to assume that with the economy shifts, all companies, including Tesla, would be affected, especially because it's producing products you can touch, where a lot of the tech companies from Silicon Valley, you can't touch or see the products. Google, for example, comes to mind, but they're making all that money. So I bring this up because um, Elon/Tesla is a very dark space for many companies. They can gather some general data in terms of number of vehicles they've seen coming out of the factories and things like that. And that's why the number that comes after April 1st is a huge deal, is that you extrapolate a whole 3 months worth of information of what the deal is into what you see in the balance sheet, as well as things like how many vehicles were produced. So this is kind of intriguing because Elon came out yesterday and announced, hey, we're going to be bigger than Apple. And the answer is, I actually think that there's a high likelihood that'll happen. And the question is, like, how does that happen? And the answer is, finish the Gigafactory, finish Germany, and now you have this way in which Tesla can produce large numbers of vehicles. We've got economies of scale going. We've got new battery technology in the form of the frame accepting the batteries that are being produced. So there's all these new things that are coming on that if Elon and Tesla executes it well, the number will be huge, which is great. The problem, though, is between here and there. And can there be hiccups that pop up? Um, weird things are happening, strange things are happening. So a great example, I'd have to argue that as I watch all this information, I keep wondering if there isn't a miracle angel behind Tesla. An example of which is NIO this week announced that they were shutting production for 5 days. Well, they were doing it because there's a shortage of batteries or shortage of chips. The, the issue, though, that's going on right now is there's such a huge backlog of chips that there is a spot market for chips, but it can be 2, 3, 4 times what you planned your production and you scheduled production. So you're in essence buying out. You could potentially buy space on that manufacturing line, but now you could wipe out all the profits in a slim profit industry by the fact that your chip costs tripled or quadrupled. And so Elon has had the benefit of the fact that they bought fab space or fabrication space and they stuck with it, whereas other competitors that slowed during COVID didn't retain their slots because they didn't want to lose all that money. Because even if you don't produce chips, you still have to pay for the fab space that you leased or purchased. And so so basically what's happening here is we have 6 months or a year delay on competitors delivering a lot of really nice products in competition to Tesla. And that's because they mismanaged or logically managed how to handle their fabrication of chip space in those lines at giant factories around the world. So this is an example of a miracle that puts a 1-year crimp in the show, gives Tesla more runway to get to market more quickly, get more rooted in the marketplace more quickly, and as competitors come on, their cost of unseating Tesla becomes more and more difficult. So we're reaching towards what our usual logical ends on, but I'd have to say that literally there's a discount to the market right now for fear of inflation and people moving over to bonds. And so high growth stocks like Tesla get a discount. Now, Tesla gets a bigger discount than everybody else because they deliberately are withholding information, and because they're not, blatantly saying we're withholding deliberately for these reasons, they just get the discounts because people are saying we don't want any rude surprises that cost us our jobs. So, between now and there, I don't see, other than analysts giving it upgrades, et cetera, I really don't see how Tesla sort of bridges by 30 points the current range of its stocks trading. And the reason is that there needs to be concrete information that people are getting and using to determine, their sense of what's going on with Tesla. And so in absence of that, I think that we're stuck in this roller coaster of whatever the NASDAQ is doing, the stock price kind of rolls with it. And there's a constant need to get new information flow to kind of figure out, is the company fairly valued where it is? And so I look forward to any and all of your constructive comments. Also wanted to note that we do have a few shares of SpaceX available if you're interested. We also want to encourage you to consider joining us on Patreon for sort of daily investor looks at where Tesla's at and new developments and how to manage that relative to your portfolio. Any rate, this is, I want to next move over to our health tips. First of all, wanted to encourage you to consider, so we have a health advisor to the show, and whether you got your COVID vaccine or not, he's actually recommending a regimen of sort of health process. The first part of it was, zinc, vitamin D, vitamin C, and the other parts of the regimen he suggested were, in his case, he's doing as many as 200 push-ups a day and 30 per units 4 times a day, 200 sit-ups a day as well. That's a little bit above my level of wanting to deal with, but that's his suggestion, is the stronger your body is, well done on vitamins, etc., it's going to make life a lot easier. We do have the rest of our list, which is don't forget 25 leg lifts per leg per day to make sure you strengthen your quad muscles. No more than once a week fried foods limits the possibility of type 2 diabetes, etc. Also wanted to encourage you to consider not going to bed within 4 hours of eating to let the food fully digest, minimum 2 hours, because all that stomach acid potentially gives you cancer, but it definitely can give you acid reflux and other issues as you go to bed with all that food. So, I think that I'll leave it at that for our health tips. And frankly, we do have a lot of doctors that watch our show, and we're actually looking forward to you guys giving us tips based on your specialty in medicine as well, that we can add to the show and comments that make a difference for our viewers. Any rate, this is Greg for Teslafaninsight. I hope our stripper analysis for Tesla makes sense and is useful. Tschüss German, au revoir French, Lahitro Hebrew, Choda Hafez Farsi, Zdravstvuyte Russian, Ni hao ma Chinese, and G'day, friends in Australia. Enough respect, man. And Namaste Hindi. Have a great day. Bye for now. And thanks for joining us.